Hey everyone, welcome back. If you've been sleeping on XRPL lately, I need you to sit up because right now there is a lot happening in the XRPL ecosystem that most people are simply not paying attention to. We're talking about major technical upgrades on the XRPL ledger, billions of dollars flooding into XRPL ETFs, a landmark legal settlement with the SEC and institutional giants making moves. And yet the price is sitting quietly at around $1.3. So what's going on? Is this the calm before the storm? Or is something else at play? Today I'm breaking it all down: the tech, the money, the regulations, and what it all means for XRP's future. Let's go. Let's start with the most recent development, and this one is huge for anyone who cares about what's actually happening under the hood. On May 27, 2026, the XRP ledger officially activated the Fix Cleanup 3.1.3 amendment. Now I know amendments and version numbers don't exactly get the blood pumping, but stick with me because this matters. This update introduced critical fixes for expired DENFT offers, permission domains, vault withdrawals, and loan accounting. Validators were required to upgrade their nodes to maintain service, meaning this wasn't optional. This was a mandatory network-wide upgrade. Think of it like a major software patch on your operating system, except this is the financial infrastructure that institutions are going to be building on. You need it clean. You need it reliable. And that's exactly what this update delivers. The Fix Cleanup 3.1.3 amendment removes friction for institutional adoption of the ledger. That's the key phrase right there: removing friction. Because the more reliable and bug-free this ledger is, the more confident banks, payment processors, and asset managers feel about building on top of it. But wait, there's more. Just days after 3.1.3 went live, XRPL version 3.2.0 development was teased: a new version in the works to strengthen the network's core infrastructure and security. And there's another fascinating shift happening. The core server software is being renamed from Rippled to XRPL, a symbolic but meaningful rebrand that signals the XRP ledger growing into its own identity, separate from Ripple the company. Earlier this year, an AI-driven security overhaul was also integrated: proactive AI-assisted testing and red teaming to harden the ledger against vulnerabilities. So from a pure technology standpoint, the XRP ledger is not standing still. It's getting faster, more secure, and more enterprise-ready by the month. Now let's talk about something that could be a game-changer for XRP's role in decentralized finance. A draft proposal has been filed that would extend the XRP ledger's native automated market maker with 3 swappable curve types. This gives liquidity providers more efficient ways to deploy capital and closes one of XRPL DeFi's longest-standing gaps. This is called AM-v2, and it's a big deal. Currently, XRPL's AM uses a basic constant product model, the same formula used by early DeFi protocols. But the new proposal would allow liquidity pool creators to choose between multiple curve types, including concentrated liquidity and stable swap pools. The goal is to enhance capital efficiency, liquidity, and support for tokenized real-world assets across the ecosystem. Why does this matter? Because real-world asset tokenization, putting things like bonds, real estate, and commodities on-chain, is one of the fastest-growing sectors in all of crypto. And if XRPL becomes a leading platform for that, demand for XRP as the native bridge asset goes through the roof. Daily transactions on the XRPL hit 3 million on March 15, 2026, a threefold increase from mid-2025 averages. That's driven by growth in AM pools, tokenized assets, and Relust-denominated settlement flows. 3 million transactions per day. That's not speculation, that's real usage happening right now. Alright, let's talk about the money because the numbers here are genuinely staggering. In the space of a few months at the end of 2025, XRP became one of the most actively adopted digital assets in the regulated spot ETF market. US spot XRP ETFs did not record a single net outflow day in their first month. By December 16, 2025, cumulative inflows had crossed $1 billion, making XRP the fastest digital asset to reach that milestone since Ethereum's ETF launch. Let that sink in: faster than Ethereum. In ETF history, that is remarkable. Spot ETFs have absorbed over $1.39 billion since the November 2025 launch, with May alone outpacing every previous month. And recently, the 5 US-listed spot XRP funds pulled in $25.8 million on a single Monday, the largest single-day net inflow since January 5. Institutional investors pulled nearly $2.7 billion from spot Bitcoin and Ethereum ETFs over the past 2 weeks. But rather than signaling a broad exit, that capital rotated into new altcoin funds, including XRP. So smart money isn't leaving crypto, it's rotating into XRP. That's a crucial distinction. Now here's the honest caveat. Bloomberg Intelligence estimates that 84% of total XRP ETF assets are retail-driven, which is more volatile and less likely to provide the sustained buying that could break XRP out of its current range. So while the inflows are impressive, the composition of that capital still matters. Ripple has signed roughly 10 institutional deals in 2026, including expansions of its cross-border payment rails and 3 additional bank partnerships announced in Q1. The business is growing, The question is whether that growth translates into price and when. Now the legal saga. If you've been following XRP for any amount of time, you know the SEC lawsuit cast a dark shadow over this token for years. But that chapter is finally closed. By early 2026, the case reached a settlement. Ripple agreed to pay a $125 million civil penalty to resolve the institutional sales portion. The SEC originally sought $2 billion, so the final number was a massive win for Ripple. The court ruled that XRP sold on public exchanges is not a security. Coinbase, Kraken, and many other exchanges relisted XRP, and it is now accessible on most major trading platforms globally. This legal clarity is the foundation that everything else is being built on. Without it, none of the ETF approvals, none of the institutional deals, none of the regulatory momentum would exist, and there's more on the horizon. The Clarity Act, which would provide a comprehensive framework for digital asset regulation in the U.S., is actively moving through Congress. The market is watching this as the definitive signal that could convert the 25% of institutions planning to add XRP in 2026 into actual buying power. 25% of institutional investors planning to buy XRP but waiting on regulatory confirmation before pulling the trigger. That is a massive amount of potential demand sitting on the sidelines. So with all of this good news, why is the price struggling? XRP recently broke below the long-defended $1.3 support with heavy volume, signaling a shift in short-term market sentiment. Derivatives data show cooling futures interest and weaker trader conviction, even as on-chain flows suggest longer-term accumulation continues. Supply parked overhead from the January high keeps capping rallies at $1.41. A daily close above $1.41 on volume opens $1.62 quickly. A break below $1.34 invalidates the range and puts $1.2 in play. So you've got two camps right now. The fundamentals are strong, but the technicals are under pressure. This is actually not unusual for XRP. It has always moved in explosive bursts rather than slow grinds. On-chain data still shows XRP leaving exchanges, a pattern traders interpret as longer-term accumulation despite the short-term weakness. The people who believe in XRP long-term are quietly buying and holding. The short-term traders are nervous, and the institutions? They're waiting on regulation. So let me bring it all together. The XRP ledger just received a critical technical upgrade. Version 3.2.0 is already in development. The MV2 proposal could transform XRPL into a major DeFi hub. Spot ETFs have absorbed over $1.4 billion. The SEC lawsuit is settled. Regulatory clarity is closer than ever, and institutions are lined up ready to enter. The price right now doesn't fully reflect any of that, which either means the market is wrong or it's waiting, and in crypto, waiting usually ends one way. Whether you're bullish or cautious, one thing is clear: XRP in 2026 is not the same token it was 3 years ago. The fundamentals have shifted, the institutional infrastructure is being built, and the next major move up or down will be one for the history books. Stay informed, stay patient, and as always, don't invest more than you can afford to lose. I'll see you in the next one.